This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
My guest today is Marouane Hajji from Unslashed Finance, a decentralized insurance protocol built on Ethereum. Hey, welcome to the show, Marouane.
Hey, Andy. Thank you for inviting me. Happy to be here.
Excellent. Hey, well, it's exciting to have you here. And I want to just try something a little bit different at the start of the show here. So I want to set the scene. I think we need some moody music. So let's play some music. And then I would say something like, I can't breathe. My heart beats loudly, but I barely notice it. My hands are sweaty as I dial my ledger pin for the third time. Where is it? I'm shaking. I can't think straight. Everything is foggy. I try to reach out to a friend on Telegram, but it's 2 a.m. He must be sleeping. I need to take a step back, clear my head. I can't. I go on Twitter. News keeps spitting out of this bloody media. Some speak of a hack, others of an exploit. I don't care. They fight about semantics as if nothing else was important. I check my ledger again. It can't be true. How could this happen? Not to me. This is a nightmare. Don't tell me I just got wrecked. Now, Marouane, do you want to explain what I just read there and where it comes from, and perhaps put that into context as to what you guys are building over at Unslashed Finance?
Well, thank you. That was really awesome. That's the first time I hear someone reading it. We wrote it. We never read it out loud. So these are like the few first lines from our manifesto, which is basically a medium that we posted to tell everyone who we are and to announce that we were starting Unslashed and we were doing our private launch. It was about 2 months ago. The idea behind it was just to put a little bit in perspective what happened and what still happens to a lot of people in the crypto industry. Like one day we just wake up, or maybe we are awake and we see the news on Twitter or in a Telegram group or something. And basically we end up losing a lot of money because there was a hack, there was an exploit, there was an arbitrage that was done between different protocols, and our money disappears. This is something that a lot of us went through. People around me, actually, people who just joined crypto or DeFi, and some people who went through this over and over again over the last years. Like basically having crypto stolen is not new. It's something that is probably as old as blockchain or as our industry. So this was like our way of like basically saying, okay, well, this happens, and we are trying to provide solutions to these kind of unhappy events.
That's right, because in crypto, hacks are obviously not necessarily commonplace, but crypto hacks is just part of the crypto story. And the further out that you go on, I suppose you'd call it the risk spectrum, the deeper into DeFi you go, the risk increases, just because you don't necessarily always know who is behind new products or new platforms the day that they come up. And so there is a certain amount of risk involved, and insurance is part of the finance stack that has received less attention compared to other segments, because let's face it, insurance is not sexy in the way that earning huge yields can be sexy. But crypto, as we've just discussed, I think is it is existentially riskier than many other industries. So things can go wrong. And in crypto, we're talking about things like smart contract hacks, exploits, oracle manipulation, straight up hacks, scams, all that kind of stuff. So talk to me in terms of when did you guys decide that you wanted to try and provide some kind of insurance solution? Because that's like a big proposition in its own right?
Well, that's like the interesting part in crypto is that you cannot. I mean, in traditional banking or finance, you can kind of undo transactions,
Yes.
even though even if the money is wired or they can undo transactions. And the value proposition of public blockchains and crypto is that it is trustless, and trustless means that you're not supposed to be able to undo transactions, and once money is lost, it is lost. Like it's really hard to recover it. Which makes it a little bit harder to approach from a traditional insurance industry perspective. Like if you talk to traditional insurance companies, these are risks that they don't know most of the time, that they don't understand. And I mean, even further, that given the current context for the insurance industry with the pandemic, it's not the kind of risk that they want to add or they want to bear. And on the other hand, there are a lot of people in crypto that are kind of more aware of the types of risks that are out there. So you can look at the whole industry as something that is super risky, or you can start kind of breaking down the risks into smaller pieces and see what is really risky, what is less risky, what is like kind of average type of risk, etc., etc. And you try to dig a little bit deeper in order to see how risk is structured and what are the parts that you can actually insure and what are the parts that are a little bit more difficult to assess, a little bit more difficult to price in terms of insurance pricing, and therefore a little bit difficult to cover.
And because I think what you're getting at here, so let's get into it. If you're saying that legacy players, traditional finance, right now, there's no way that they're interested in providing insurance services to anyone in crypto. It's just not something that they can even begin to understand.
They are definitely exploring. They are touching some things. Like, for example, like if you have custody services, they can have protections up to like $100, $200 million of insurance, but the policy is very specific, so not all risks are covered, and traditional insurance stuff, I would say, and at the same time, it doesn't cover the whole assets that custodians have. So, like, basically, I'm not going to give specific names, but most of the custodians have like something like between 3 and 5% of the assets under custody that are insured. Sometimes it can be higher, like up to maybe 8 or 10%, but it's still kind of small compared. I mean, what is covered by insurance is still kind of small compared to the total amount of assets they have under custody. But if we go back to kind of our story, yes, like we identified insurance as a kind of not so sexy industry, but we also identified it as one of like the most important pieces that DeFi would need. So we started exploring different types of policies that we could provide, and we were super interested in slashing for proof of stake blockchains in the beginnings. And at some point we had like kind of the final design of the protocol, and we were looking at it and we were like, okay, well, this thing could have any type of risk that we want to insure. Like we could be in a position of providing insurance to what we call like real world risks. It's not our focus right now, but the way the product is designed or the way the protocol is designed allows us to hold any type of risk. The policy needs to be clearly defined. The claim process also needs to be clearly defined. But once we get these two right, the rest can flow pretty easily. And what is interesting with insurance is that it often comes with asset management. So we are working on a solution that is going basically to allow to insure a certain number of users, and to allow the people who are providing the insurance capital to also also make their assets work. So it's really kind of a replica of the way traditional insurance works, using blockchain smart contracts and all the small things that can be done on the blockchain that are like really hard to do in the traditional insurance world. Like, for example, we pay premiums live in real time. We can start and stop a policy whenever, the user can start and stop a policy whenever they want, etc., etc. So we just took the traditional kind of finance, insurance, actuarial tools, and we applied them to these kinds of risks that are crypto and blockchain risks.
Yeah, and because as I understand it, creating an insurance protocol and having to kind of game out all of these different risks, you would call it risk modeling, right? And I think you've had you in one of your Medium posts, you describe, I think there's 9 pillars that you sort of use to construct this risk modeling. So you don't need to go through all the 9 pillars, but just kind of to tell us, give us an idea of how you approach that risk modeling and what it involves.
Okay, so basically, like it's actually like the fact that we have a quantitative approach. Like we have both a quantitative and qualitative approach towards risk modeling is one of our fundamental pillars. And the idea is to say that we have a certain number of risks that are that we can approach from a qualitative approach from a qualitative perspective. Like we don't have enough data in order to really model them, and we have other risks for which we have enough data to model them, and we tend to focus on the quantitative approach whenever it's possible. Like one policy that we issued not so long ago is a policy for USDT peg. So USDT is, Tether is a stable coin, and there is a risk that Tether loses the peg. And in the history of Tether, there were a lot of times there were stories about whether or not the USDT is really backed by real dollars, and this risk reflects in the way the price of USDT moves over time. So we have about 5-6 years of data, and we take this data and we start modeling it. We start modeling it from a statistical perspective. We use a little bit of machine learning to calibrate the models. We're going to have a distribution of losses, and based on this, we start getting a clear view of what could happen. Then we add a more qualitative side, which is basically discussions with people who are near the Tether, let's say, organization, and who can give us a little bit more insights regarding what's happening, how things are organized, etc., so that we can have a little bit more clarity with regards to this risk. So this allows us at the end of the day to put a number on that risk, which is basically, this is the premium price that reflects the risk, and that allows also the people who are providing capital to stay afloat no matter what happens. So this is an example of this approach. We have a similar approach with regards to, for example, slashing risk. Slashing is basically a punishment when a validator on a proof of stake network doesn't behave as expected. So on a proof of stake network, people are going to stake tokens. Like if we take ETH2, for example, people are staking ETH in order to participate in the network and in order to earn staking rewards in ETH as well, which is a kind of interest that is earned. And validators are infrastructure that allows the network to function. So if a validator doesn't behave as expected, it is punished. And the punishment can be like losing, 1% of the ETH that they have, or 2%, or 5%, or whatever. And Lido, they offer a validator as a service infrastructure for ETH2. So what we did is that we took the history of all these validators that are part of Lido, which are validators who are active or on a lot of different other networks. So we had enough historical data in order to start also modeling this risk of having one or several validators being punished over, like basically the models, we run them over 20 years or over 30 years in order to see whether they make sense or not. And the idea is just to try to recreate what happened over the last 2 or 3 years over a longer period of time, to see in which cases we can have some events for which the insurance would need to pay out. So we did this for Lido, and it allowed us at the end basically to have a price for that risk. So this is, this is not, there is nothing, we are not reinventing math, and we are not reinventing statistics or probabilities. We are using kind of classic tools to assess, price the risk, and we are using these inputs to feed the protocol and to allow people to take either side of the trade. Like you have some people who are going to be who are going to have exposure to the risk, and you have other people who are going to be buying the insurance.
Marouane, you talked about, I think you mentioned Lido Finance there, and I know some of your other clients include ParaSwap, which is a DEX aggregator, and I know you're working with Enzyme, on-chain asset management. I know Mona Elisa at Enzyme, and also Techemy Capital, Fran and Don and the crew at Techemy Capital. So these guys are more, these guys are providing these guys are either funds or protocols. Do you provide insurance to like individual traders as well?
Yeah, this is exactly also what we do. Like we started by focusing on having kind of a B2B approach, or
Yep.
what we call protocol to protocol approach.
Yep.
We have also a protocol to business approach, which is basically working with Techemy, and Techemy basically they can use a lot of different insurance products, and some insurance products are basically going to be tailor-made for them. Enzyme, same story. We have a pretty close relationship with Mona and team, and we are going to have pretty deep integrations. ParaSwap, it's a different approach, but exactly the same thing. But yeah, like basically once we have a policy, anyone can buy it. So it can be an individual trader, it can be a fund, it can be another protocol. It's just that we have an approach where we prefer to be in touch and discuss with the people who are interested in the insurance products to identify the needs and kind of design the policy to fit these needs, and be also open about what we can cover and what we cannot. Sometimes there are some risks that we cannot cover. Like when we identify a risk and we know that something is going to happen, and we discuss with the team behind the protocol, and we tell them, well, this seems really risky, and it would be better if you took another approach in order for us to be able to provide an insurance there, and they don't want to change their approach. So in these kinds of cases, what we do is just that we tell them that we're not going to protect these risks. So there are a lot of things that could be covered, and unfortunately, I would say that there are also a lot of players who are going to choose something to do something in a certain way, and are not willing to change it, even though it just increases the risk of their users. So we are in this kind of weird position where we need to also give some advice. Like, I mean, I had a lot of protocols who got in touch with us prior to launching on mainnet, just to understand what could be covered and what couldn't be. And sometimes what we see is some dynamics, or some designs that really don't make sense, and that add risk without really adding any value. And in these kinds of cases, we are pretty open. Like, we tell them, okay, well, this for us is super risky, and we would prefer to be designed this way or this way, so that it can be covered to some extent. So this is also part of what we do, and it's super interesting because it allows us to have exposure to what's happening in this space pretty early on. Like, before the protocols launch, they are already getting in touch, and they are already telling us what they are doing, how they are doing it, etc., etc.
Very good.
Yeah.
And I understand there's an Unslashed Finance DAO. So what is the idea there?
Oh, the DAO basically, the idea behind the DAO is to have kind of community. Yeah, it's actually the community who is kind of taking over already how the protocol should move forward. And to be honest, I was super surprised and excited about what happened. Like, we launched our token, I think about 2 weeks ago, and the community took over everything. Like, not everything, but took over a lot of things. Like they are coming up with ideas of new types of insurance policies that we could provide. Like there was one idea that I really liked, which was basically an NFT policy, like similar to what is in the real world. Like if you have a very valuable piece of art, you're going to insure it in case it's. I was going to say in case there is a hack, but actually it's in case it is stolen, in case there is an issue. No one knows. So there were some guys in community who were thinking about offering insurance for NFTs, which are basically the non-fungible tokens. Most of the time, they represent pieces of art, and it was super interesting to start working to start exploring this product and start working on it and see whether or not there was interest and what kind of policies we could design, etc. So the role of the DAO is basically to be able to ultimately to be able to take over the whole functioning of the protocol. Right now we are still like the team side or the dev team side. We are still the ones leading both the development of the protocol and the risk modeling. But ultimately, it's going to be, ultimately, we would like it to be fully decentralized and fully controlled by the DAO. And this is where we are heading. And this is where all DeFi protocols are heading. So, yeah.
And well, that's probably a good place to finish off this part of the podcast then, Marouane. We'll go to a break and come back and finish off with the crypto conversation hot take round. But before we do that, I'd be very interested to get your thoughts on, I guess, just where you see DeFi at the moment, and what any big trends or expectations that you're picking for the remainder of this year. We're sort of, we're in a bull market at the moment, but that won't last forever. DeFi had a massive 2020, still, growing in user numbers and assets under management, but there's also this massive NFT movement happening as well. So yeah, just give me your kind of inside perspective on DeFi at the moment.
Well, I have a kind of insight regarding the bull market, because this is something that I discussed with a lot of people who were in this industry for the last 7-8 years, and there are talks about what they call a super cycle. Like we have everything from a macro perspective that is there for Bitcoin in this case, because Bitcoin is driving everything.
Yes.
For Bitcoin to go through a super cycle, which is basically like we are not going to have an 80% correction the same way we had the last 3 times. We are likely to have more like a smaller correction and to continue going up. And this thesis is driven just by the type of investors that are entering right now, which are, you have a little bit of insurance companies, some asset management companies, some funds, a lot of tech companies who are allocating some of their treasury, and this is also something that is interesting. And actually, Techemy is working on this side, and I think that they know way more than I do about it. But there is room to introduce these types of actors to the DeFi space. And if this happens, the current trends is basically like you have like over the last 2 years, we were just rediscovering finance. Like with Compound, we had a money market, right? With Uniswap, we had kind of exchange. With MakerDAO, we had a stable coin, but that is fully backed. There were attempts at stable coins, different types of stable coins that are what they call algorithmic. But I think that we're going towards something where we're going to start really implementing more complex products on chain, and we are likely to have something maybe more robust from a financial design perspective in DeFi. So, like, the trend that I see over maybe not the next year, but over like the next years, it could be something like starting to have a lot of traditional finance people join DeFi projects. And this is something that I am already seeing, like a lot of traditional finance people starting DeFi projects and looking into DeFi, seeing what could be done, etc., and bringing this know-how is super important for the industry to move forward. Like there is a lot of like experimenting, but at some point in time, we understand that there are things that we cannot reinvent. Math, finance, we can bring transparency. We can do a lot of things to improve, but we are not going to reinvent. And we are not going to rediscover math. So we are at this point, we are I think in a very interesting we are in a very interesting place where we're starting to have more and more traditional finance people joining, and we are likely to have more and more interesting products built on chain, which means different types of yields, different types of risk profiles, etc., and I think this is going to be a pretty big driver if we combine it to having a little bit more sophisticated types of investors joining the DeFi space. Yeah.
Yes, very, very interesting thoughts there. Lots to take in, and yeah, I'm fascinated by this idea of the Bitcoin super cycle myself, and yeah, that almost really should do.
Yeah,
really should do a separate podcast on that idea. But as you said, it's kind of based on the idea that, as we've just seen, Morgan Stanley have made it possible for their, let's say, high roller clients, people who have over 3 million in assets with Morgan Stanley, will now be able to effectively buy Bitcoin. And so I think the super cycle thesis is, as more big players like that enable Bitcoin purchases, it just seems less likely that there'll be an 80% from crash when the bull market does end. But it's a bit dangerous to think like that as well. So I don't know. We'll just have to see.
I mean, we will see. I guess we will see probably in about 9-12 months.
Yes, exactly right. All right. Well, let's go to a quick break, and then we'll come back, Marouane, and we'll finish off with the very famous crypto conversation hot take round.
In today's crypto market, the team at Brave New Coin are the sector's leading builders of custom crypto indices. BNC's powerful indexing engine draws on Brave New Coin's premium data to calculate high-frequency intraday and end-of-day indices for a wide range of index products. BNC's custom indices help you to gain exposure to the crypto assets class and track your performance against the market without having to become a stock picker. Not sure what you need? A Brave New Coin consultant can help you assess your requirements. Contact BNC today to find out more. Are you ready to trade the future of crypto today? Introducing Leverage, a self-custodial decentralized exchange that performs with the speed and features you're accustomed to. Leverage is fast. It's powered by Gluon, a revolutionary DeFi infrastructure that makes DeFi work at scale. It brings speed, transparency, and massive gas efficiencies to its users. Say goodbye to exchange hacks, front-running, Ethereum network congestion, and high fees. Leverage is the future of trading. It combines the best features of CeFi with all the benefits of DeFi. Like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io and trade the future of crypto today.
All right, we're back, and I'm with Marouane from Unslashed Finance. And hey, I like to finish each episode with just a very quick round of rapid-fire crypto conversation hot takes. Are you up for it?
All right, let's go.
Marouane, where would you say that you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
Oh, I'm probably in the middle. I joined this whole thing in 2013 thanks to Bitcoin, and I was really attracted to the ideology. I didn't understand the tech behind it at all. Like I was there not for the tech, for the ideology, which is kind of weird. But yeah, probably in the middle. I'm also a big fan of Ethereum. Like I joined back the crypto movement thanks to Ethereum.
Yeah, but anyone in DeFi is going to be a fan of Ethereum as well. But hey, all right, well, sorry, what would you say is your firmest conviction crypto opinion?
That it's not about changing finance, it's about changing governance systems.
Oh, very good. Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What does DeFi look like in 10 years' time?
Everything finance would be DeFi. So the question is, what would traditional banks look like in 10 years' time? So I would tend to put it this way. So DeFi would become mainstream. Traditional finance is something that would need to find some other types of, like basically to reposition itself. But I think it's still like overestimating what we can do, and it's still overestimating the resistance that we are going to meet while pushing this whole movement forward.
Very good, very good. Hard to argue with that. Well, look, on a similar note, William Gibson said that the future is already here. It's just not evenly distributed. Marouane, can you think of an example of the future being here right now, but most people aren't aware of it?
Well, NFTs is I mean, I'm not an art guy. And I saw this thing coming. Like basically, I had people who were into the NFT movement for more than a year now, and I was just watching on the sidelines because I didn't understand what was happening. And once it happened, it just hit me. So it's already here, but I think like it's not as big as it should be. And it's the future, and it's already in the present.
Very much so. And I'm recording a podcast later today with Zach, the CEO at Mintable. So I'm looking forward to that actually. All right. Well, let's finish this off, Marouane. Firstly, it's time to get weird. Let's zoom out. What do you see as the long-term future for the human race? Do you see utopia or dystopia?
It's kind of difficult, and it's the kind of question that I used to think about a lot a few years back. And right now, I'm just all confused about everything that is happening. Is it going to be a utopia or dystopia? I mean, I'm pretty positive person, so I tend to go with the utopia. But the questions that I'm asking myself right now is whether or not we are going to survive at all, given how things can go wrong so quickly, especially with the COVID or the Corona pandemic. So it's more like, is there going to be a future? And if there is a future, I'm positive, utopia. If there is no future, that's another story.
Very good. All right. Well, the final question, Marouane, is what is your favorite science fiction book, film, show, or universe?
this is me and my kind of nerdy side. I'm a big fan of Stargate and Battlestar Galactica.
Nice.
Huge fan. Which I mean, I don't have enough people around me who really like this genre, so I feel a little bit alone on this one. But yeah, like when I discovered, and I discovered them pretty late, let's be honest, but when I discovered them I was like, whoa, this is
Battlestar Galactica, like the original or the modern, the new one, or both?
I saw both. When you start one, you need to see the other one, like
exactly. Oh, that's fantastic. All right. Hey, it's been a pleasure talking to you today. Marouane, let's close this out. I'll hand the microphone back to you and tell the people where they can go to find you on your various platforms and what they should do if they feel that they are playing in DeFi and they need to get some insurance protection to just cover themselves against smart contract hacks or exploits or all that risky good stuff.
Yeah. All right. So we are going to launch to officially launch in the coming days. So our website is Unslashed.finance. Our Twitter is @UnslashedF. And basically, if you have any requests for any type of policies you would like to see, you can just send us either a DM or get in touch with us on Telegram. And we are pretty quick to answer and would love to hear from you.
Very good. All the best and bye for now.
Thank you, Andy.